Well, good afternoon, everyone. Scott Henderson, shooter. And hey, we are going to go over our weekly recap, cover some charts, see what's going on out here. And of course, at the end of our presentation, please do review our disclosures. Let's jump right into it. Going to take a little bit of a different skew this week. Going to start off with the Dow. And, I'm leaning in one direction here. We have a lot of upside. We really need a major catalyst for us. Now, what we look for are confluent zones. In other words, when we retrace, where are we going to find shelves? So, the numbers that I see as far as the Dow, maybe around 445. If we get back down there, we should see a little bit of a bounce. I think the deepest retrace we see without some kind of catastrophe is down here around 395, which still is quite a ways down. But I see us as being in that band between these two zones most of 2026. And now going out to 2027, I see this potentially could run to about 594. Now let me jump over to the SPY. Let's give a visual here. A little more of a mess. It's not as clean as the Dow. We have no sell side imbalance that sort of supports this shelf. So that's the current buy zone. This we have obviously these sells that came in here, which are supporting the shelf. So this is a much bigger buy zone as far as us holding. I see us pushing up to maybe about 725 here, and then we should back to that's kind of where quality is, or at least the way it looks as far as the wave structure, where we're measuring between our flushing drives versus where we're pushing with our peaking drives. And the flushing drives are much more aggressive. So if this is a broadening formation, we could really easily come down here, or we could even come down with a deeper drawdown, maybe around 448 in that range. But right now we're pretty solid as far as the tape's concerned. Internals look good. Breadth is still expanding. It's a little thin. There's not a lot of big money. There's a lot of small trade, 250K kind of thing where the volume is. And let me just double check. You guys can see my chart, right? After I already started. Let's just roll over to the NASDAQ. Now here again, our first demand shelf that really is supported is down here around 589. The inside of that shelf comes in right around 571. This is our next band that's coming in as far as a shelf that's developing. I see this a little shallower. However, I'm probably going to extend that. And when I extend that, it'll be up to the 1382 as far as that number's concerned. Because at this point, this trend is just not wanding. It's building. Got very euphoric off of this back test. The whole demeanor changed. We had this rolling look to it. It was rolling over as far as the wave structure. Really was even difficult to pull out where the peaking drives were, because reality is that's probably the first peaking drive, looking at the structure internally as far as the wave. So I doubt that this is our next peaking drive. I think our next peaking drive could be up around 150 fib, around 698, maybe 700. Then we get a decent back test. So maybe we get something like this, and maybe that shelf holds. But I would rather I prefer a deeper drawdown back into the 50% fib or the 618, because then we have some conviction it's done and it's not going to end up putting in this choppy flag-like flat, maybe something like this where we're going to get stuck there for a while. Here we were there for 2 months. This downtrend, we were here, for a little over 2 months as well. However, we continued trend down. So, we could see something like this right up here. So it could be a much steeper decline, which in some ways is better, especially if we're positioned right for it, than not. So now I'm going to look at this twofold here. The challenging part with getting long is because we're at all-time highs. All right, that's the biggest challenge I have. And, I've had that way too many times this year. Where I've been faked out. And I don't know that those drivers are going to stop. And when the Fed actually comes in and starts easing, that's going to be an accelerant. However, history also tells us that once the Fed starts easing and they start pumping flow into the market, typically within 3 months, we roll back over and have a decent drawdown, 23 to 28%. So the average was 25.6% over the next 12 months. So you get this pump into the liquidity coming into the market, and then it evaporates because now the Fed's done its business and it's over with, and it's waiting to see what the outcome is. And that pipeline takes 3 to 6 months. So looking at CRM, and now get real interested in starting a starter position at 203. Little deeper drawdown here. And you'll notice on the charts I print, it shows the different levels. And what I'm trying to do is sort of reflect that we have a bigger zone. Fortunately, the bands are not wide enough for them just to pop up. I have to enlarge them so you can see them. But the intent is, hey, this is a good spot to start a third position size. This is a good spot to add, and this is a good spot to have a full position size on. However, the tape right now is not likely going to give it to us with this wick. I think we have a decent shot at breaking back out of this where we are just with the structure and also the potential bid that AI is going to give Salesforce, just because they have such a huge moat of retail sales. And I think our first target, now this goes way the heck out to 28, puts us up around $480. Now, one thing you'll notice that on all of these charts, I'm projecting out further in time because we're going towards that position trade foundation. All right, let's look at CQNX. Now, I think we push maybe to 56 here, then we get an ABC correction. So, of course, you'll want to structure your trade around that thinking. A big buy zone would be if we back test here, because basically we got an overshoot, where this look is. So we got our first confirmed low, and then we got a second divergent low, and we got a third divergent low. And what is that? If anybody can call it out for me, it would be fantastic. But it's referred to as a 3 drive. And basically, a 3 drive is one of the few patterns in time, and forgive me for being quick, that has the potential of a reversion to the mean or 100% correction back to the high. So that would put us back up around where I'm measuring around the 78.6. So I like the structure and the look of this particular chart more so than many, just because it's technically accurate and it also has been trading Elliott wave pattern nearly perfectly. All right, looking at Indy. Now I'm going to stay with the larger time frames and then step down when it's needed on the individual charts. But I see the largest buy zone right down here around 402. Now it's a semi. It actually got a decent bid this month, but I am going to step down to the weekly on this one because I want to make sure you see where we rejected price pretty aggressively here. So we got up to this 549, then we rejected. So I would suspect that we get to this zone right here around 741. Then we reject again. I don't know if it's going to be this aggressive of a reject, but it could do that. So you just want to be mindful. So when we get up to this 3, at least the way I'm measuring it, but I do think ultimately that leg holds with semis. We are confirming on the weekly as far as RSI is concerned. If we just step down to the daily, we did confirm. And we got a little divergence on a high, so it's toppy a little bit here at 587. It would be better if we tagged the shelf, but I don't know that it gives us to it. So here again, that's something I would want to scale into based on that look. Now, Unity is actually another perfect setup. It's just a question of when that big news comes out that the big contract's coming in for some kind of, my assumption would be security or some type of deal like what Palantir just announced with NVIDIA, which, by the way, is an absolute huge deal. And we need to look at peripherals, but I haven't gotten there yet because there are going to be a lot of smaller companies that benefit from that relationship, because ultimately big tech has decided, hey, let's use the vehicles we have, let's max them out, let's make them better. Well, there's a lot of smaller vehicles that make up what Palantir does. So Unity here, it really doesn't get bullish per se until we get back above $40. Then we should see a little bit more of a catalyst coming into that. But if we jump out to our monthly on this and just looking at the structure that we have here, I mean, we just have total breakdown. The first sell side imbalance that we have right up here is back around $98. So this is going to catch a bid, and we really can look at it from the shelves. It's got to get above that $50, then it get above 58. Then it should be clear selling to the 61.8 at 103. I'm only projecting a shallow retrace at this point. So I'm measuring from this 110.39 high and this 13.75 low. So my thought is, that 69.03 at 382 is conservative. I don't necessarily like to trade dumps like this. I like more history in that, where we have a longer bullish trend, really to build some structure for the tape. But I think Unity, again, is that play on AI infrastructure in a specific way. And they have some applications that simply aren't anywhere else. So I think it's just a matter of when the bid comes. All right, let's look at CNQ. Nice, beautiful push down to the shelf as far as the demand zone. And then you have a buy-side imbalance that occurred off of that first general candle, which just builds to the conviction that, hey, the bulls or the funds are buying this. So, that typically means institutions are coming in, not retail. That's institutions. Each one of these larger candles tends to imply that. Once we got the back test, look at this candle that came in right behind that. They just bought that dip there, and then we had this wick off of that same zone. So that's a pretty doggone solid shelf. So if we do get back down there, I would have at least a half position size, and my bias would be towards a full position size. However, figure out how you're going to scale. I do like this as a longer term position. I'm looking at the 73.65 roughly. Now I'm off kilter because my fibs don't align with the count. So, I'm looking at this as an ABC structure, another ABC structure, and an ABC structure, which is a little different than anything else I have mapped, which is referred to, by the way, as a 3-3-3 pattern, which are basically ABC, 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 ABC kind of thing. So, but they're very predictable. Typically, when you get an ABC on your first leg, your third leg, not your corrective leg, is similar in length and breadth as far as the symmetric. So basically, we just copied this leg and moved it up here. So ultimately, we could push towards about $85. Now, one thing about a lot of these names, the calls or the cash secured puts were not as liquid as some other names that obviously we would prefer to see that. Qatar Energy is one of those that has some decent spots. January, and then I believe it was the March options that were there. They were decently liquid. I mean, we didn't have 10,000 open contracts kind of thing. I prefer over 1,000 open contracts all the time just because they're liquid. That means I can get in and out and I'm not paying a premium. I don't like paying a 20% spread or a 30% spread because I'm already buying at a loss and I don't like to do that. So I would rather find a name that has some liquidity and trade the liquidity, at least from a swing trade standpoint, not necessarily a position trade. Now realize most of these charts that I'm going through are position trade, and they are for punch card stock. So we're looking to build a position out in these, regardless of the market environment. We just want to know where our levels are. Like, for example, we're at a good buy zone right now. If it gets back down to 16.26, that's a zone where we want to add. And, pushes a little bit lower, we definitely want to get towards the full position size. So how you're structuring your entries, little pieces, building a position out. And as it works in our favor, we want to have a full position size on this particular name once it breaks 30, no matter what. That really is the thought. The reason is because once that breaks out, we're heading up to this $50 zone. That pretty much is guaranteed. All right, let's jump to AST Space Mobile. Now, we got some fantastic news today. Some contracts that came into play. I wish we had more of a push off. I really do. The challenge here is I'm a little mixed, which is why I didn't draw my Elliott wave here for meeting. This is clearly one. The question is, was this two? And we have a distorted impulse. Was this two? Right? Or is this two? I think this is two. So that would mean that we probably have put in our corrective leg and we're going up here, which is why I sold cash secured put shows. Now, I just happened to be before the news, so it was great. I mean, got a little bid from where we are. The only thing I wish I did different was sell the $75 cash secured puts instead of the 70. But that said, I think we hold. I don't get concerned until we break below that. It's 6667. Still a little weak. All of the theme parks, Six Flags was another one that caught my attention, are weak or weakening. And the challenge here is this: if this is an impulse down, we would be looking at something like this as our corrective leg. So it will get us back down to this buy, which is one reason I have that highlighted, visually seeing it. At this point, it's not broken yet. We're wicking off of it, so it really's done nothing wrong. RSI doesn't really give us any conviction that it's turning up, and neither does MACD. So this is where you want to make sure you bring in your strategy to trigger your entry, because I want conviction once we get that weekly breakout. So we broke above that weekly breakout high. I want a full position size on. But ultimately, I see $56 coming in here at some point on MGM once it builds back up. And we are seeing signs. Copper, there's a couple of other things. Manufacturing wasn't that bad. Just some things that were real estate settling. Rates come down a little bit more. I mean, there's some markets that are rough in real estate. But over here in Texas, I mean, besides Austin, really the market's holding up solid considering how many investors there are here. But the growth continues. The migration is still continuing. So as that happens, I think we're going to see more and more of a recovery in the fun kind of things like MGM. But structurally, it is at a place where you can start to scale. I would prefer the buy zone, but I'm going to leave that up to you. But it is on our punch card stock. Now, on Semi, we initiated a buy on this yesterday, right at the buy zone. I mean, we're right there, so start scaling. We're looking for maybe 82.63 for our wave 3 and up maybe at 94.81 to the upside. Now, I have two buy zones noted here, and the big buy zone is way the heck down here. Really is because this is all noise. It's really the same zone. It's just we had a solid institutional buy candle, as I call a general candle, and a second grouping. So they really are. So if we get a piece here, maybe put half of what your normal size would be here until we get a breakout above 56.10. You want a full position size on and see if we get a little bit of a back test in this market. But I don't see that catalyst right now. So this is a name that I think runs with AI. The number of data centers that we're building out is just like what happened with ARM, what happened with AMD, okay? It's now spreading out. There's not one provider that can provide all the components that they need to build out this 100x, which is what it is. 100 times our current data center capacity is what we're going to need to grow from. So we haven't even started this growth trend yet. So this is a name we want a piece on for that reason. All right, looking at NOW, ServiceNow initiated on this, I think it was yesterday, maybe it was the day before. Looking for a push maybe to about $1,200. A little more pricey as far as the stock price than what I typically like to play with, but we're right at the buy zone. Nice institutional buying jumped in on this. Rumor has it that they have some kind of deal working with AI. We actually had a primary wave set up off of this low. So this is a back test. So this is our mound 1 that's occurred. So mound 3, this is the perfect scenario because wave 3 is usually our longest wave. Let's look at SRPT. Now, typically I don't like bio just because they can kneecap you when they pull a trial or something like that. But I just like where this chart looked, the structure coming in on RSI here, just the bottoming pattern, the fact we got a clean cross on the MACD, right? We got a gap overhead. If you take the first fib and we just measure from this 63.39 to our low at 10.69, 50% back is $37. Well, we're at $23. Whereas if I come out and I look at the monthly, much bigger picture to the upside. This thing measures to $121. It gets any kind of organization again. Because it built it. Look at the structure that we built from here. Look at how solid that structure was off of this base. So I see the same kind of thing potentially happening here. Now, the only difference is we'll take out these highs if that's the case. If this entire thing was just a larger structural pattern and we get this kind of flat look to it, but we're talking taking this high out, then we're going to come in and get a deeper turn down, something like this. That would be like the worst case scenario if it gets going. But $200 on the stock from $23 is a huge upside. So I like the idea of working on trying to keep a piece here as far as bio, just for that reason, because I do like the upside of it. LKQ, I'm going to stick to the month. Monthly is still wide open on the MACD. We are diverging. Excuse me, I was incorrect in stating that. We are not diverging on the monthly on RSI, and we're pending across. I would like the MACD to be totally crossing there. On the weekly, we are. On the daily, we had our first cross back over here on this low. So this was kind of our confirming low and our divergent low. So from a structural standpoint, it really meets all the criteria as a primary wave setup, which is absolutely a fantastic thing. Measures to about 57, 54 back to the upside. Now, LKQ, if I'm correct, they're the guys that take automobiles and break down the auto part. Now, they will probably do very well if we have, if I heard Ford and a couple of the big car manufacturers are preparing for a major crash in auto sales. That just could be from default because the default numbers were pretty high. And honestly, I haven't looked at them in weeks. But an entity like LKQ will buy these vehicles for parts at auctions at dirt cheap when there's a heck of a lot of cars. And so on that premise, if they can buy the vehicles cheaper for the part, right, what's it going to do to their bottom line? So this is an entity that actually recovers from a crashing auto market because people repair their older cars more versus buying new ones because they can't afford to buy them. 50% position size, we get back to 19. We break back above our prior high. Now, I'm not going to use this shelf. The only reason is because technically it's not there. It really is this shelf. We need to clear 44 bucks for this thing really to get bullish, which is way the heck up there. So it's a little challenging to build a position. But you know your risk model, you know what position sizes you want to put on. But I do like this for a longer term position trade and realize this is going out to 2027 as far as that 57. So some of this stuff we're talking about, and it's got, we basically have a nice floor. That's it. Sorry, I read a message and got distracted. All right, so let's look at SLB. Now, I'm looking at this as an ad zone. I mean, right now it's trying to get out of this. Volume's coming in. Some nice green candles coming in, decent volume. We had some decent buyers right here off this floor. Couldn't take back that candle, though. I would have rather taken out. Really, it's got to clear this 38.25 for me, right about the middle of that imbalance zone. And what I'm doing is I'm going way the heck out here, and I'm looking at where our breakdowns were, where our buy side and sell side imbalances were in these shelves, in these zones. So we really don't get bullish till we clear that 39.79. But our first target would be 42, then 50 bucks, and then it actually measures back up to 61.93 if everything holds. So some decent upside. Okay, EPAM. Let me go to the monthly on this one. Huge upside. Just structurally perfect. Okay, so our main buy zone, we overshot it. Wicked off of there. We're really wicking off of that here. Didn't get back into this buy zone here, down here on this lower side. Didn't quite touch it, which is kind of good because then we should base here for a little bit. I think we base out maybe till January, February, March next year, and then we launch. So this is now when we, especially for a common share position trade, this is where you just want to scale in lots or put good to cancel orders in on something like this to the upside. But ultimately, this thing measures back to 500 bucks. I mean, just a nice look from where we are if it's going to recover. All right, CDW, another beautiful thing. Now, primary wave occurred. The primary wave setup occurred here. Okay. When we see these two bands, and understand that this is a structure to mounds and how I view Elliott wave patterns and how they stair step. You have like an immediate support zone, and then you always have a secondary support zone, which is typically where you get an overshoot. But in this tape, right now, this wick was the initial support zone. We've already overshot that low, right into an imbalance zone here. I went down a shelf lower than that because I'm saying, okay, well, we're already in that buy zone. Now really is the buy zone. But I like it better if we get down to 125, just looking at market conditions. But also at the same time, the way the tape looks to me. Because if we measure this particular leg coming down and we just look at it, if we look at it from an ABC, that's ABC, comes back down, equality is right towards the base of that buy zone. So that's something we just want to keep in mind when we take a look at it, position size, because we want to make sure that we are on the right side of the tape and not the wrong side of the tape any more than need be. So really, until we break back above this 184, I don't see this. It doesn't have as much breadth as EPAM, SLB, or LKQ. I mean, back to the upside, but I think 210 is very viable here. All right, now SW is heading for that third drive. I'm going to come down to the weekly so you can see that a little better. This is Flushing Drive 1, Flushing Drive 2. It broke this low coming down here. So we're going to do something like this and take off, or this is going to become a flat, kind of something like this, right? We build out this base and we kind of get stuck there. So I'm not as excited now about SW. However, structurally, it's still done nothing wrong until it takes out this low at 37.07. Trade Desk. Now, the caveat with Trade Desk is I am not sure how it responds. It's not the same as CRM. However, they actually are doing a better job integrating with AI, but we're not seeing this in the tape at all. I mean, it's almost like somebody knows something. These are just very aggressive sells. And now we've got kind of a double bottom here, not really a lower low in price. So maybe we get a lower low in price around 30.48. However, I don't really get conviction that's going to occur until we break below 48.44. But structurally, it is a primary wave setup, meets all of the criteria. We might just be a little early, sort of my view. So mind your stop if you jump on board with T. I like it. Back to the upside. The question is this done, to the downside? That's the challenging part, because none of this stuff tells us that for sure. So assuming that's our A, C could come way the heck down to $1.25. I don't think it breaks down that low. I mean, we need a total failure in its capability to compete with other AI products, but that would be my take. All right, so let's look at IFF. Now, here again, initial flush zone, secondary flush zone. So we now are in that, just testing it now. So as long as we don't get back below this buy zone, this imbalance that occurred right here, this thing's going to head back up towards 80 bucks. Pretty sure. I mean, just structurally. Now, this is international flowers and fragrance. So I like the thesis as well. So I think we do head back towards about 80 bucks. Okay, let's go to some requested names. Let's start with Caesar. All right, don't like it. We've got this demand zone, right here around 14 bucks, 15 bucks, but it's totally flushing. Also don't like what's going on in Vegas either. And the fact that we are seeing retail slowdown. This is going to get hit, I think, continually. And I think we test this trend support. So I think we test 8 bucks first. If I wanted to build a position trade, and I don't because of the look is ABC structure to the downside. So this is our A, this is our B. So what's our C look like? I don't like the idea that I see really almost a destruction of revenue in a tape, even though most of the time it doesn't happen. 33% of the time it happens as an outlier event. Most of the time what happens is you build out this like flat. So flushing drive 1, flushing drive 2, flushing drive 3. What can we always get on the third drive? An overshoot. That's true for a bullish or bearish scenario. So, $3 to $5 is totally viable to the downside if the market's really soft. So no, we've got better setups. I would avoid it and go to something else. ENPH, nice zones here that it's sort of brought in. However, with the buzz, with how much energy, you would think it would be doing better than it is right. RSI has not crossed. MACD is kind of crossing on the monthly. We come down to the weekly. I want to chase the flow and volume, especially on energy. If the market isn't pumping it right now with AI, my first question is why? What are they not doing? Or what specialty they are in that the market doesn't see yet? So I really don't get interested in the 21 bucks because I want this wick to be tested because we really don't have another low to be tested. And we have no wicks here. None. I mean, we have some wicks up here in this zone, right? But we really haven't tested this zone. So if we get back into this green band, anywhere from 25 to 1950. Yeah, then I get interested right there. Yeah, and the catalyst with solar, and I forget who posted in chat about doing solar on their house, and just telling my story. I looked and reviewed solar for my home now 3 times. It doesn't make sense. And not just because of the cost of the solar, because the cost of the increased insurance on homeowners to have the solar on the roof and how many voids there are in the warranty. So even if homeowners covers the solar, it won't cover what underneath solar where they've modified the roof. So there's like this gap. You don't have coverage. But the way I figured out my particular home, and I have 100% sun 10 months out of the year, is it needs to be at 28 cents a kilowatt hour for me to hit BE in 20 years, and I'm not paying that. My contract right now is for 20 cents. Now, granted, it might get up to 28 soon, but that doesn't include the service and maintenance. So to me, I think solar has a place because we have such vast amount of solar, but I don't know that it's going to be in retail solar panels. Those big domes that concentrated solar, I think they have a bigger shot, but at the same time, I think SPWR, for example, will benefit very much like Sunrun did, but it's given back quite a little bit of those gains. So, but looking at the structural as far as the count, right now we're in an impulse. We have one buy zone down here at $1.14. Really needs to clear this 251. Then we need to clear this 336. but I still see this slow meandering grind back up just because that cost basis has gotten high enough. And the power, they're not offering 15 cents a kilowatt hour with most of the contracts on the power purchase contract. They're offering 22 to 25 or a progression over 5 or 10 years. So they're not giving you like a fixed price like they were when rates were cheap, because they're offsetting the differential. So I don't see the growth there yet. So even though I like the idea of solar and I get, Kirk's thesis on that, this would probably not be a full position size for me if I put it on. I would probably stick to a half, maybe 3/4. That would sort of be my thought. All right, let's look at Constellation Brands. Actually, it has a nice trend line, which we're currently holding. However, it doesn't look like it's going to stick. However, let's say that's drive 1, this is drive 2, this is drive 3. What can drive 3 always do? It can overshoot. So it gets back down to this 132, 120 range. It might be interesting there. The challenging part is where the ABC measures again. And I'm seeing this in a lot of tapes. By the way, when I'm looking at these things, I'm seeing further downside potentially. So you don't get this across the market MO when you're looking at so many indicators. And let me just jump over to BKRB as an example. See, this is a monthly look at BRKB, where I see the confluence zone off of this impulse, which this right way, by the way, this is wave 5, right? So our wave's done. It's likely that we're going to get at least 420, I think. If you measure it as an ABC, I see it down to 409, 410. But my main point is when we start seeing some leaders in our market, the generals that typically don't budge and they constantly get on these uptrend grinds, when that uptrend is ending, we're going to see moves like what I think we might see in Constellation Brands to the downside. So I would say pass when it gets to a point where I might get interested. If it breaks back above 147, then I might put a position on to try and chase it long there. But here, until I have some conviction, MACD needs to cross. I'd prefer the cross on the RSI as well. When we go and look at the weekly, we have crossed on the MACD, and RSI is putting in some divergence. So this is a confirming low and a divergent low, right? However, this candle here tells me it's not done. It's very unusual you get that unless you're getting continuation. So to me, that would mean that we get one more divergent low, maybe not that low, maybe around what? A 105, 110, in that range. So there's better setup. All right. However, I will say this, is that when that does recover, there's significant upside. So, all right, now Galaxy Digital has done nothing wrong here. Even this consolidation, kind of building out an aggressive flag. As long as we don't lose the shelf right here at 35.85, I'd hold, because it measures up. 1618 measures to $59. Just coming in here and drawing an impulse leg. This is wave 1. Actually, wave 3 should be up to at least the 200 fib, only because it typically is the longest wave if it is an impulse. And wave 5 would end up around $101. So this is a name I would try and keep a position on as far as holding it. All right, looking at Big Sky. Only thing I don't like here is peaking drive 1, peaking drive 2, peaking drive 3. However, if you do your count internally, this really is an ABC. So this is A, B, C. It's not really an impulse on that first leg. So it's still part of this whole flat kind of thing. We really haven't broken above. We just popped our head above. So I'm going to measure this a little differently as far as my visual. I'm going to say this is our 1, right? This is our 2. So then we should get where the heck did my 5 go? So we should get a 5 around 39.20 is what I would think. Just as far as measuring our 757 low, our 30.31 high, and then coming in and measuring our low at 386. So we're doing this expansion of Fibonacci's to measure what range we should be. So we should be in this golden box, the second golden box, no matter what. It's just whether is it going to be shallow, which, are we going to flatten out and roll back over, which would be a better buy zone. So, to me, the best buy zone would be off of this imbalance here. So we get back to this, what is it, 1484? That would be where I would get interested in adding a position to that. Okay, Planet Labs. It's not done. I think this is of Mound 2. I think this is peaking drive 1. I think this is peaking drive 2. The question is peaking drive 3 way the heck up here, or are we going to flatten out? around the 300 fib and roll over. It doesn't happen that way very often. Usually you have to have a catalyst with an individual name. So, I'm looking at this, and the reason I'm saying is because this is clearly peaking drive one. This is clearly peaking drive two. We have peaking drive one, peaking drive two, peaking drive three. What happens in an Elliott wave mound structure is you have this expansion of capital that occurs in every tape. So there's more buyers. It's just like when Apple first started, nobody wanted a knife, right? However, as more and more people started using it, it became a trend. Now it becomes a dominant piece of our society, and that occurs in any company. It's either growing or it's dying. So if a company's growing, it's going to continue to have that expansion of capital. That's the same thing why we see the breadth in the tape occur. So, I would say that this probably heads back towards 20, 25 bucks, from 13 bucks where we are now. Only piece I change my mind is if it breaks below this 12. But let me come down a little bit lower here in a time frame to give you the visual here. And this already looks like an impulse down. It doesn't look like an ABC. Looks to me like this is our 1, 2, 3, 4, kind of a tight 5. So kind of a leading diagonal down. However, that breaks, this morphs into an ABC. So we always want to be conscious. One thing you'll always hear me is, when am I right and when am I wrong? I want to know that. All right. So I'm wrong if we break below this low, then we're probably going to get something like equality, and we're going to test this shelf because that happens to be where our next band is, around $8.44. So where we got a clear signal of where we're out. So we break below this low, you're not holding Planet Labs anymore. I mean, we already know it's there. It's written. It's like a big red sign that says, get stopped out. And then wait for it to reset, get some divergence, and we re-enter. But note RSI on the daily. It's kind of rolling up into it now, so we're good. MACD is trying to cross. You come down to the 4-hour, it has crossed on both of them, right? So we have this nice imbalance zone down here, which I don't think we get back down here, but that is where our conviction is. Okay, now outs, why don't I have my chart worked up? I'm in the right one. Maybe I only put fibs on this. Okay, yeah, I'm viewing this as an ABC, and I saved some of these charts just because I wanted to draw out. So this is peaking drive 1, peaking drive 2, right? Peaking drive 3. So this is 1. So we should get, actually, I'm going to change my mind. I'm not going to call that. I'm going to call this reason it. Peaking drive 1, peaking drive 2, peaking drive 3. We got a correction, broke off below the flag. So I'm going to call that a 2. Sometimes the tape's noisy and I don't see it right away until I'm after I'm doing it. All right, measuring equality puts wave 3 up around 56 bucks. So this has some decent upside. I mean, decent upside. So the back test will come in maybe around 50% between the 78.618, and then we should head up towards the 150 fib based on that look. Now realize, just because we rejected, notice that rejection right there, off that 618, there's a greater chance that we broaden out a lot here. And that's something we just want to be mindful in the tape when we're thinking about putting on a trade. So I'm already seeing this as a broadening formation. So it's going to do something like this, is what I think it will do. So just realize when you get up here, you're going to get like, oh, crap, I should have sold it. And it'll probably happen a couple times. So the broadening of these candles will continue to get more breadth as we increase up the tape. That's just my thought. All right, new scale power. Boy, they can't make up their mind, can they? Sellers are in control, buyers are in control, and they gave up. MACD is not crossed on the weekly. Let's go down to the daily. Trying to cross on the daily. On the 4-hour has crossed. Same with RSI. Nice clean ABC pattern on that. It's first thing that stands out to me on this corrective leg here. Clean right there. Almost symmetrical. Goes down and tested our wick. Almost right to it. Matter of fact, I'm going to draw a line there just to prove that point or not. Yeah, look at that. Right wick. Right to it. Wicked. Right to it. That's pretty solid as a floor. Just looking at it from that time frame. Come back to the weekly again. I got absolutely lost. So this is mound 1. Call this mound 2. It's shallower. So we got a leading diagonal. There's a good possibility this ends at 60 bucks just because of the breadth here. However, if it is going to go, it's going to go up to the 2618. So either it's going to reject shallow or it's running. So you want to be conscious of that. So it gets above 61 bucks, right? You want to be trading into it because this will be one that bounces. Okay, let's look at ANRG. Nice base from a low float, low dollar stock. Nice structure coming back in. A little hard to find the fib that worked. I measured this 525 and this 1118, and then measured our low at 25 cents. So there's quite a little bit of breadth in there. Equality is 316, which is right overhead. So, we could reject. However, we are confirming on the RSI on the weekly. MACD is crossed a little bit. We come down. I'm just going to jump down to the 4-hour because I want to look at what that looks like. We are bullish on RSI. MACD cross really doesn't tell me otherwise. So looking at, I would like it off of this 211. It's a good spot to enter if we don't have one. We have this buy side imbalance that just occurred right here, this little band right here. So it gets down to about $1.58 again. That's 50% position size. Your next shelf is going to be a little bit lower than that, which is right down here, which comes in about 85 cents. So the one problem with small names is you don't have the institute. And when I say small names, stock values below $10, okay? Not necessarily full float. They're not operating on $20 billion, so there's not a lot of liquidity there. So when I say low float or small name, that's what I'm referring to. In other words, it doesn't have as much pump as other names in the market. So then it relies more on the micro and macro of the name of as far as what they're doing. It's just like the pumps that we've seen in Amentus. All right. They're very specific news type events because it's such a unique business. I'm not familiar what R.A.R.E does, but I like it from $2 for a shot at 482 for 100% gain. I do like that look. So that's my thought. All right, Loop. We already are kind of back testing this. We wicked off of this with our last low. As long as we don't take out this 144 low, I would say that we're looking at about 261. 5 should come in around 309. That's sort of my take. FSI, Flexible Solutions International. I think it has a date with $13.96 right here. All right, breaks below this, then we're probably going down to 640 first. Hey, your real buy zone, your big buy zone is down at 490. I mean, we could flush back there. Realize you got a broadening formation here. So you want to be conscious of that. So, we could flush right back down to this 553 before we take off. So great. Until next time, folks.